Eric Muathe with Muathe.com. Let's take a look at the close for US markets on Friday. Let's call it what was at the end of the day pretty much an unchanged session. Let's take a look at those charts. And this is part one of the US market analysis for the weekend of March 4th and March 5th, 2017. Let's take a look at markets here. We continue seeing that the Dow, the NASDAQ, and S&P 500 continue trading well above the threshold number of 69.1, which might explain why this market still continues to be very strong, something we've been talking about for a while. And we can actually see that both, if not all of the markets, continue to hold above that threshold number. As long as the Dow, the NASDAQ, and S&P are holding above 69.1, we can assume that this market is going to be very strong and sideways at worst. And here we can see a good example of this. Here in 2013, NASDAQ moves above 69.1 on the monthly. It stays above 69.1 on the monthly RSI until here, which is this period. So in other words, we can see that all this, almost 2 years plus of this amazing run, the NASDAQ was holding above 69.1. So we can clearly assume that as long as markets are defending this number on the monthly time frame, we can expect higher markets. Here is the Dow. The Dow continues to trade above 69.1. So we know the result is exactly what we see. Strong market. S&P 500 on the monthly also same thing. Continues to hold above 69.1. As long as it is holding above 69.1, you can expect markets to be sideways at worst, bullish at best. Now if you take a look at let's go to the weekly charts. And on the weekly, begin here with the NASDAQ. NASDAQ also continues to hold and defend the 69.1 level. Check the video description for a link describing and explaining why this number is critical and why this exact number. All right. Also, take a look at the Dow. The Dow has been holding above 69.1 since, let's call it, late November during this weekly move. And throughout all this process, the Dow has been holding above that 69.1 threshold. So the movement high in the market just makes sense and is consistent. Take a look at the S&P 500. It continues to hold again above that threshold number of 69.1. Let's take a look at the dailies. We can see that the NASDAQ did come off 69.1. You can see it went above 69.1 here sometime in the middle of February. So during this movement here, it's only until recently, somewhere around here, that it finally moved back below 69.1, but continues to be stable. You can draw a line connecting recent RSI lows, and the market continues to respect that. You can see you draw a line like this. We are yet to break this support line. And again, let me just draw that line so we can be clear. Day to day, you can see that this line continues to hold. Even as of Friday's action, the market held support there. So the daily chart continues to be okay. Take a look at the Dow. Now, one thing I need to explain here is generally when you see a market do something like this, here you can see that the Dow did move above the 69.1 threshold early in the year and actually late in the year. And so we're talking about this entry here, which is this movement. Dow stayed above 69.1 for a couple of weeks during this period here. Generally, that is not your high. That's not going to be a high. Just like what I'm saying here is because of this period here where the market has held above 69.1, chances are very high that the market is going to pull back slightly. RSI is going to come off 69.1. Markets are going to make higher highs at some point before we see the first evidence of negative divergence. In other words, at some point, the market is going to make a move higher at the expense of the technicals. So until we can see that negative divergence, this market has a lot of leg room to record higher prices, even with shallow pullbacks. I hope that makes sense. If you take a look at the S&P 500, you can see here we spent some time above 69.1. That was not the high. In fact, we can see that the market actually did make an improvement in price highs So let's take a look at this. In fact, this actually tricked some of us here because there was an improvement to new all-time highs at the expense of the technicals. So that negative divergence led to this shallow pullback before we go to new highs. Now that we've spent some couple of days, if not a week or so here, chances are with this stay above 69.1, we are still going to see higher prices at some point. In other words, rarely do you come off this level and just drop and prices just drop. Rarely do you do that. Generally speaking, you're going to see some type of negative divergence. As an example here, we can see that there was an improvement here in price highs, but the technicals made a lower high. And that is when we come off the high for a slight move lower. And again, you made an improvement in price highs here, but the technicals made a lower high. And that is ultimately what brings it down slightly here. So what I'm saying here is there's a good chance that this is still going to be a market that even with a pullback might still record higher price daily closing highs at some point. Take a look at the hourly charts here. We begin with the NASDAQ. The NASDAQ's been bouncing on RSI 50 successfully. Every time it holds the RSI 50 level on the hourly, it goes on to record higher highs. Keep in mind, here I am using RSI setting of 26. Here we can see double bottom, uniform activity below 50 back above the 50 level for this re-entry. Uniform activity support here for this re-entry. Uniform activity here. Support on the 50 line for this re-entry. And over the last couple of trading hours, also Friday's session, the market hit those RSI support line on the 50 level and bounced. So hour to hour, we can see that the NASDAQ continues to be healthy. Take a look at the Dow. The Dow hourly also looks good. As you can see, if you take this break line here, that RSI break, once we break out above that line, so this period here, the market moves to new highs and has had a nice run. If we extend this RSI line, we can see that the market's been coming back to test that line on a back test. Successful support here for the lows here, hour to hour. Support here again on the line, hour to hour for these lows. And also here, as of Thursday and Friday session, the market held. So until we break this line, short term, the market continues to be healthy. Take a look at the S&P 500 on its hourly chart, just like we saw for the Dow. Similar line. So this line here was a great entry level breakout. So breakout here in the above that blue line for this entry price, which happens to be a breakout. And so we come back and we've been testing this line. We held support here for this re-entry. We held support here, double bottom support on that line for this re-entry. And Thursday, Friday lows, market held that, and so we are holding. So short term, as long as the S&P is holding above this line, we can assume that the general market continues to be healthy. And as we've seen in this video, as long as monthlies, weeklies, and dailies are generally above 69.1, one can assume that this market will continue to be stable to outright bullish. If somebody wants to short the market, you've got to be selective and find sectors that are giving you sell signals. Eric Muathe with Muathe.com. Subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we're going to take a look at commodities and other sectors, and also take a look at some stock picks and ETFs. Again, that video should be out sometime on Sunday morning. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S.